Welcome, dear traders. You are watching a recap of the Asian session. Investors are still digesting the downgrade of the US credit rating by Fitch. Risk appetite also decreased in the Asian equity markets after a sharp drop on Wall Street yesterday. As a result, all Asian stock indexes took a nosedive in the morning, extending their losses. The unpleasant surprise from one of the world's leading rating agencies confused investors and undermined market optimism. Moreover, such a drastic fall in stocks took place after a rally triggered by strong earnings reports and hopes for a soft landing. Although Fitch's decision caused outrage in the White House, officials said that the downgrade was based on outdated data. Yet it did not help stocks to avoid a drop, since yesterday all risk assets went into negative territory. Futures on the S&P 500 and NASDAQ indexes also started a new day with a decrease along with the main Asian stock indexes. After the downgrade of the US credit rating, investors prefer to lock their 5 months' profits for this year and sell off risk assets for the second session in a row. Surprisingly, the US dollar took advantage of the situation. Investors are flocking back to safe haven currencies, especially the greenback. The latter also ignored Fitch's decision, which deteriorated the country's financial prospects. The greenback climbed on strong economic reports as well as rising treasury yields. The ADP report published yesterday showed that the labor market remains tight, so the Fed can continue to raise rates if necessary. The US dollar approached 102.70 amid such prospects. In the Asian session, it climbed above its 4-week high, moving in the upward range of 102.50 and 102.80. However, there might be another surprise today. The US dollar is likely to add gains amid the Bank of England's rate decision. If it hikes the key rate today, this will be an important signal for markets. Another hawkish decision by a major central bank will confirm the fact that the tightening cycle is not over yet. The same can be said about the Fed. In the near future, this factor may become the main driver for the US currency. After all, the July NonFarm Payrolls report is scheduled for tomorrow. It will show the real state of the US labor market. Average hourly wages and unemployment data are also on tap tomorrow. Given strong macro stats and the announcement of the refinancing of the US debt, the yield of the US government bonds rose higher. After the yield reached 9 months peaks, the Japanese currency faced strong bearish pressure. The dollar-yen paid once to 143.9. Apart from a strong dollar, traders were also disappointed with the Bank of Japan's dovish decision. The regulator clarified that the loosening of control on the bond yields did not mean an exit from the ultra-loose monetary policy. Judging by a sharp fall in the yen, the Bank of Japan had to take action, and the reason for a climb in the range of 142.80 and 143.80 could be either purchases of government bonds by the Japanese authorities or their intervention on forex. In the first case, the yen resumed an upward movement following a tweak in the yield curve control and the narrowing gap between US treasuries and Japanese government bonds. The yen could have also recovered amid a dip in the money supply because of the intervention. At the end of the Asian session, it settled above 142.90. The Australian dollar also made an attempt to appreciate. On Thursday morning, it almost touched the upper limit of the range of 0.6514 and 0.6555. However, it quickly slipped from these highs. At the end of the volatile Asian session, it was trading around 0.6515, and the Aussie has been dipping for the second day in a row. after weak domestic data on the risk-off sentiment. As a fresh reports showed, the goods and services exports in Australia fell by 1.7% in June. This indicator decreased mainly due to the fall in the commodity prices and the fragile recovery of China's economy. In the near term, there could hardly be any positive shifts. The New Zealand dollar incurred the biggest losses. Its trajectory looked more like a roller coaster. The Kiwi was rapidly sliding against the US dollar in the morning. The Kiwi dollar was moving in the downward range over 0.6064 and 0.6093 in the Asian trading. It ended Thursday's session near 0.6075. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon!